Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates of the stock markets, the way the benchmarks are trading at this point in time and the way the sectors and the stocks are moving as well. And how should you be really approaching this market, which is now down over 600 points. When you talk about the Sensex, it's trading at 60,688 at the lowest point of the day. 180 points gone for the Nifty too, 18,051. That's the level at which the Nifty is also trading at. All the sectors of the Nifty down in the red, including the benchmarks and the broader markets. Everything is down in the red. 1% cut for the benchmarks right now. Talk about the broader markets, the mid and the small cap indices as well. For the Nifty mid cap 100 index, it's a cut over 1%. It's a 1.1% drop right there, 1.2% cut now. And the small cap also down in the same way. 7.4% uptick for the India VIX. That's the index that you need to watch out for. 15.45 currently. And that's what's leading to this sharper decline that you're seeing on the benchmarks. 44 declines on the Nifty 50 stocks versus 6 advances. There are only 6 stocks that are up in the green right now. Some of those movers on the upside defying the overall gravity: Divis Laboratories, HDFC Life, Maruti, Asian Paints and Ultratech Cement, all up by about 0.25% to about 1.5% odd. On the downside, what is really creating the pressure on the markets? It's the metals pack, Hindalco, JSW Steel down in the red. Coal India, ONGC also seeing slipping about 2.5 to 3 odd percent. Tata Motors also dragging by about 2% odd as well. In terms of the sectors, the one that is leading, actually the markets downward and creating maximum amount of pressure today is the realty pack, down by over 2% odd. The banks are down in trade, metals down by 2% as well, 1% cut for the Nifty bank and also for the IT space as well. The FMCG stocks are down by 1.6% odd. Pharma seeing the least amount of decline, about 0.1% down in the red. But let's get our guest on board to understand what is really causing this decline and how much fall can you really see from the markets from here on, or can we actually anticipate a bounce from these levels? Chandan Taparia joins in from Motilal Oswal Financial Services. He's the Vice President Analyst at Derivatives and Technicals at Motilal Oswal Financial Services. Welcome, Chandan. Thank you so much for taking the time out for us. Here's wishing you a very, very happy new year. And, hopefully for your entire team, for your family, this year turns out to be a great, profitable and also very, very healthy year as well. So first up, how are you looking at these markets? 2 days of 2023 turned out to be fairly good, but today is when the decline is coming in. How do we see the markets going forward from here?
Thank you very much, Sakshi. Thanks for having me. And first of all, wishing a very happy, healthy and prosperous new year to you, entire family and entire team at BTTV. So talking about the market, we have seen good run-up in the 2022, but finally on year-to-year basis, we closed with gains of around 5%. But the good part is sector-wise momentum was better compared to the broad indices. The Bank Nifty has rallied by 22%. Nifty Metal was up by around 20%. Selective auto stocks have done well. Only IT and pharma were under pressure in the last year. Now, as we start the new year, the question, the query always remains that what is undertone. So if I talk about the major undertone that remains bullish, what is the ultimate conclusion from 2022 is the declines were being bought. If I look at the closing of 2021, that was near to 17,350 and we closed around 750 points higher, but year-on-year basis. But we recovered by around 3,000 points from the lower levels. So ultimately, conclusion of 2022 was the declines are being bought. We have conquered all the concerns of the global market. We have conquered all the issues related to geopolitical worries. So this is the clear message for the Indian market that every meaningful decline will be bought going forward. Recently, the Nifty has corrected from its lifetime high of 18,887 to 17,777. And we believe that 17,777 could act as a major support. However, some dip could be there as we are now heading towards the corporate earning. And the next trigger will be the budget 2023. That is the key important event, as this is going to be the last key budget for this tenure of the government. So we have two key events and 17,777 is the hurdle, key level. So we believe that any decline towards this level could be bought. Slow and steady market may see the range bound move, but first we are looking at 18,250 and above this, the rally can extend to 18,500 or higher levels. So need to hold 17,777. That is the ultimately thing we are looking in this market. If I talk about the sector-wise, banking, financial, selective auto, fertilizers, sugar, these are the stocks which could be on the radar and the budge over the next couple of weeks to over the next couple of months.
But no pre-budget rally expectations right there. I mean, like we also missed the Santa rally, which we were anticipating widely in the last week of December. That didn't happen. The markets did close in on that 19,000 mark, but there was no, clear breaching of that. And also, now that we've started off, we're just about barely a month away from the budget. You did point out about the sectors that are usually in flavor right ahead of the budget, and investors can put in focus there. But on the basis of those as well, no pre-budget rally is what you expect?
So, like, if I first conclude the Santa rally, only Santa came to support the market and the decline were being bought. Same, I believe that's going to happen with the budget. The decline would be bought because of the budget trigger. However, due to the global concerns, some bounce could be restricted, some follow-off could be missing at higher levels. But we totally believe that selective sector will do. Few heavyweights will be nervous. So that's why we are with the view that dips could be bought. Not sure about the pre-budget rally, but sure about the decline will be bought and the key support are likely to hold to take the market in positive range-bound manner.
Okay, understood that. But Chandan, also help me understand, we are in a range, in a broad range for the market. What will it take for the markets to really break out of this range? Will it be the corporate earnings? Will it be some positive news flows from the budget? What will really help the markets really break out of this range?
So I don't think that there will be the big surprise or big nervousness from the corporate earning. Some of the prices are discounting that, but the key trigger might be the budget. However, this budget is key trigger. As I said, that the last budget of this tenure of the government, and if anything happens related to your corporate taxes, related to your GST, related to your STT, or anything related to the infra boosting or income spending on the agricultures. So these are going to be the key trigger. And I think because of these three key trigger, any decline due to the global market will be bought. So we need to understand that we are falling because of the global market, but we are holding because of the domestic strength. If you notice in last couple of quarters, FIs were continuously selling, but DIs were continuously buying and supporting the Indian indices and Indian markets. So we believe there is a huge money into the DIs, and that money is likely to hold the sentiment on the lower side. So I think after the corporate earning, the budget will be the key event, which could give a decisive momentum to the Indian market.
But for this year as a whole, if I have to ask you, 2023, most of the brokerage houses have said that, it's going to be another year which could be volatile after the roller coaster ride that we've seen already in 2022. And perhaps it could be a year of no or low returns. What are your thoughts on the benchmarks per se, or on the Nifty bank perhaps, if people want to stay with the index? What kind of return can they really expect, or is it actually wiser to be going and sticking with the stocks that can actually help you create alpha?
So, Sakshi, when you talk about the generating alpha, then definitely we have to go with the stock specific activities. And selective stocks have potential to do better than the indices. If I talk about the broader market, I believe it would be tough to generate bigger return, but yes, base of the market is shifting higher. So at least market is all set to head towards the recent highs. That is for positional point of view. I'm not commenting on the immediate point of view.
Sure.
So if you look at the last month, December was down. It formed a bearish engulfing. Usually, historically, January also has the dull momentum where the bounces are being restricted. If I look at the data of last 15 years, but again, due to the budget, and this is a different budget where dips could be bought. So I believe that somehow 17,777 or 17,500 could be the major support. We can head towards 18,500, then 18,881 to 19,250. So these are the levels we are closely watching for this entire 2023.
And the sectors that you would be most bullish on for this entire year, which ones would those be on your top radar?
So, Sakshi, I'll be continue to bullish in the entire BFSI segment. The banking stocks, which really done well, likely to outperform. Your bank Nifty is outperforming and generating the alpha in this market. So, continue to remain bullish in the banking, counter, selective, whether you talk about private or the PSU name. But definitely, I'll go with the heavyweights counter where I have the margin of safety as well as the chances for the momentum. Apart from BFSI, I will focus on the selective auto name. One can also look at the few metal, however, volatility could be there. But due to the global market, selective metal stocks are likely to continue their rhythm, as we have seen good run up in the last year also. So banking, financials, metal, selective auto, these are the stocks from broader market or indices per se would be on radar to generate the alpha in this market scenario.
Okay, so name about 2 to 3 stocks that you believe can actually give investors sharp returns despite the overall macroeconomic concerns that could impact the benchmarks. 3 stocks, top bets for 2023. What would those be?
Yeah, so I'll look at the stocks from the different sector by diversifying the investment and at the same time finding out to generate the alpha. First name I'll pick from banking, that is buy on the Axis Bank. Axis Bank, however, already has seen the good momentum, but the major breakout and momentum happened into 2022. If I look at the right now, the stock is holding the gains respecting to its rising trend line. Major trend is intact to positive. Right now it's trading near to 960. Accumulate this counter in between 930 to 950. Put support near to 880. We are looking for around 10 to 15% run up towards 1050 to 1100 in Axis Bank. So at least expecting 10 to 15% run up in heavyweights counter like Axis Bank. Accumulated lower levels with support of 880 zone in Axis Bank. Apart from that, other name which I want to mention here is RHIM. So RHIM is a mid-cap name, non-FNO counter. This is RHI Magnesia India Limited. This is somehow I can say capital engineering sort of company. It's a manufacturing engineering companies, so can do well. If I look at the price setup, already we have seen good run up in the last year. Momentum is likely to intact. This is the counter which is performing well from last 7 year on year-to-year basis. Price setup is quite encouraging. Accumulate this counter in between 830 to 850. We have major support near to around 770 and having potential to rally towards 950 to 1000. That also comes to around 15 to 20% return from current level. Apart from that, as we are heading towards the budget, total focus will be on the agri theme of the India because Bharat is all gaon ka desh hai. So when you talk about agriculture, you cannot forget about the fertilizer. So I have positive view on RCF and fact and selective other name, but here I'll pick with RCF. This stock is all set to give a consolidation breakout of last 4 to 5 weeks. Major trend is positive. Every decline is being bought. Recently it drifted to 105, but again the buying was seen. So right now it's trading near to 137. Accumulate this stock between 125 to 130. Put support near to 105. Look for a rally towards 20 to 25% that can head to 160, 165 levels from current zone. So 3 stocks which we talked about: Axis Bank, RHIM, and RCM. These 3 names has potential to rally by 10 to 20, 25% from the current levels to generate the alpha, and also selected the theme which can do well in the budget as well as the corporate earning as well as the current market scenario.
Sure, absolutely. Well, thanks a lot for that, Chandan, and thanks for sharing these top 3 bets for 2023. These stocks could actually help investors generate alpha and give potential returns of up to 20-25%. So these stocks could be on your radar: Axis Bank, RHIM, and RCF right there. Chandan, stay on with us. Let me take it across to my colleague Akansha, who has a list of all those stocks that are buzzing in trade today. Akansha, take it away.
Thank you for letting me join, Sakshi. The shares of Equitas Small Finance rallied over 7% to hit a 52-week high of 63.9 in Wednesday's trade. This happened because the RBI approved a proposal of SBI Fund Management to acquire 9.9% equity shares in the bank through various schemes managed by it. The next stock on our list is Avenue Supermarts. Avenue Supermarts said that its revenue growth in the quarter ended December slowed down on sequential basis, even though the company posted a double-digit rise in its top line. This has prompted the shares to drop 2.07% in today's trade. Next, let's take a look at the recent IPO, Radiant Cash Management Services Limited. It made a decent debut on the bourses today. The stock listed at 103 rupees on the NSE at a premium of around 10%, at a premium of 9.57% compared to the issue price, which was around 94 rupees. Meanwhile, on BSE, the stock debuted at a premium of 5.64% at around 99.30 rupees. While the PSU bank stocks have also tanked roughly around 2% in today's trade. Canara Bank is down 2.46%, Bank of Baroda is down 2.45%, Union Bank of India is down 2.31%, Central Bank of India is down 2.29%, Punjab National Bank is down 2.16%, while IDBI Bank is down 1.88%. Back to you, Sakshi.
Thanks a lot, Akansha. Well, Chandan, any thoughts on the banking space and how they are taking some profits? Some profits are being taken off the table. These stocks have outperformed in the last quarter of 2022. Any thoughts here? How investors should approach in the new year, all the PSU banks and the banking space overall?
Yeah, so when you talk about the Nifty Bank, as I mentioned, that comparatively Bank Nifty has potential to outperform the market. It has measured support near to 40 to 600, 40 to 700 zone, and Bank Nifty has potential to again rally towards 43,500 level. When you talk about private bank, as I mentioned, as Axis Bank could do well. In PSU, I'll focus on SBI and Canara Bank. SBI is one of the strongest banking name. Major trend is positive and it declined towards 600 is the buying opportunity with support near to 575. We are looking for a 630, 635 kind of target. So one can continue to remain bullish in selective private and PSU bank. And out of that Axis from private and SBI from the PSU will be the top bet to trade the market.
All right. Well, thank you so much, Chandan, for being with us on the show and sharing with us all the insights on markets, several pockets that we've spoken about, and the stocks that you've shared as your top bets for 2023. Let's now move on to see how the markets are trading. Still 550 points cut on the Sensex, 60,743 current level. The Nifty is also hovering near 18,067. That's down by about 165 odd points, 0.9% of a cut, slightly off the lowest point of the day. But we'll have to see how the markets really pan out. Is there a recovery from these levels, a sharp bounce back? Or will the markets be sulking in today's trading session as we hit this midweek? Do stay on with us onto Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel if you haven't already. And also continue to engage with us through all our social media handles. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for joining us for now.